Hi everyone, welcome back or welcome to my channel. Today I'm reviewing my Roth IRA account positions as of 19th of May 2023. So in my Roth IRA account, I am trying to beat SPY, just see if by selling covered calls, I can improve the returns. So I started with 100 shares of SPY and I'm selling covered SPY calls one contract at a time. I started on the 31st of January and my goal is to get additional 6 to 10% income from the covered calls. So far, the income is about 3%. So we are well on track. I'm putting any leftover cash into high dividend yielding stocks like Rhythm and Starwood, and that's not relevant to our campaign, so I will be mostly ignoring this part. So the trades I've made so far, so as I said, I started with the SPY, bought 100 shares and sold one covered call at 413. Then it expired. Then I started another position at 410, bought it back, etc., etc. I also got a dividend uh, of just $150, which turned out to be about, a little over 0.36 of one SPY share. So these are the trades until today. So last time I closed the call that was expiring 2 weeks ago on the 5th of May at 420, and I started a new position with the same strike price. And the call is expiring today. So last Friday, SPY was trading around 412, and the value of the call of the 420 call was very small, 16 cents. So I was considering rolling it into like 1 week later, which would be expiring on the 26th of May into the same strike price. So I always try to roll about 2% away from the current price of SPY. However, the premium would be only 63 cents a share, which would be about $63. And it would be kind of risky move because I was expecting the market to go up. If the market goes up, the price of the covered call could move against us. So in the end, I decided not to roll and just stay and hopefully pocket these 16 cents per share, which is just $16. So hour and a half before the close of trading, SPY was trading around 418. So SPY did move up quite a bit, in fact. So 6 points, that's about 1.5%. So that's a pretty big move for 1 week. And you can see that if, our call is trading around 10 cents. So it's a little bit cheaper than it was a week ago. However, the call that I was considering to roll into, namely the 420 call expiring next week, now is trading at the price of about 240 or say 237. So if I rolled this today, if I rolled, this 420 call into this 420 call, my premium would be $2.27. And that's much, much more than what I would have gotten a week ago. That was only 63 cents. Now it's over $2, right? So that's, 3.5 or almost 4 times more. So this is the reason why I did not want to roll, because I felt it's too risky. And in fact, this call now is almost at the money. And so the position is definitely more risky. On the other hand, the call that's expiring today, we are still, the strike price is 420, and it didn't look like it would reach 420 in the next hour and a half. So this was pretty safe. I was pretty certain this would expire worthless. And so looking at this situation, I want to roll to a new call, right? And so I looked at the next week. expiration on the 26th. And if I rolled into that, I would again, so I was looking at roughly 2% away. So for 26, and the price was just 50 cents. So at the most, I would get like 40 cents on the roll, which was really not that much. So I decided to go with the later expiration. So I picked 2 weeks, and so the price is about 140 here, about 10, 11. So I set a limit order to roll at 130. So $1.30 per contract, and I let it sit there for 15, 20 minutes and nothing happened. In fact, the spread was getting smaller and smaller. So I decided to reduce the limit and changed it to 125, and that actually when the trade got executed. So I was able to buy back uh, the old call for just 6 cents, and I was able to sell the new call for $1.31. So if you go back to this, so the price of the old call went down by about 4 cents, and the price of the new call went down about 10 cents because SPY went slightly lower. So this is the trade I made. I got a credit of about $124 coming from that after commission and all the fees. So that's not bad. So we rolled from expiration date of May 19 to June 2nd, which is 2 weeks from today. I increased the strike price by 6 points, so that's about 1.5%. That's pretty good. And the credit I got, as I said, is about $124. And again, I used that money to buy a few shares, 15 shares of Rhythm. So these are the trades. These are the old trades. And here is the new trade, right? On 519, I covered the old call and sold short the new call for $1.31. So let's see. So the position as of close of Friday. So I have about 100 shares of SPY, a little bit more for the dividend, and I have one short call. Again, the strike price for 26 and expiration is June 6th, 23. Now, June 2nd, 2023. Okay. And that's where we are. So let's see how the market was doing. I told you last time that SPY is trading in a very tight range, right? It was trading kind of here, and I was expecting to go up, and indeed, it did go up. So this is Monday. Yes, this is Monday. So Monday stayed kind of the same. Tuesday dipped down a little bit, and then Wednesday, Thursday, there was a pretty strong push up because it seemed like the debt ceiling situation was improving, so the markets like that. And today, there was no real progress, so there's pause in the run up. This, as usual, the orange indicates the price where I was able to do some new transactions. So this is the price SPY was at here when I did the roll. And this is the new strike price of the options. So that's at 4. This is at 426. And here are the more detailed numbers. As you can see, again, I'm interested in this orange column. So up till today, the profit from just the covered calls is about $1,200, a little over $1,200, which is about 3% of the initial amount that we put in. So I started with about $40,000, right? And so far, just from the covered call, I have $1,200 profit. And the SPY itself is behaving quite nicely. So I have another 1,500, close to 1,600 profit from SPY. So in combination, the profit from SPY and from the covered calls, it's about 2,800. So from January 1st, we got so far total of about 7% profit, which is pretty nice. And everything is kind of working as one would expect. So no big problems. Here is more in a graphical form. Again, the uh, yellow color is the profit from the covered calls. So you can see it's steadily growing. The blue is the profit from the SPY ETF itself. So we were losing some money in the middle of March, but now things are improving and the SPY is profitable. And in combination, that's the orange line, we are doing quite well. So close, as I said, about $2,800 of total profit, which is very nice. So the plans for next week. I am expecting volatile markets. The moves can be both up and down depending how the debt ceiling talks are going, right? Once the debt ceiling standoff is resolved, I'm expecting the markets to go up, but you never know. It might be, already baked into the market. So hopefully they will go up and hopefully not too strongly because big moves are not good for covered calls. But anyway, so I'm expecting the markets to go up. Uh, normally if there were no big news, ahead, I would probably choose a 3 weeks expiration or even 4 weeks till expiration. But because of this big news still kind of in the process of being decided, I decided to go with a shorter expiration. So I picked a 2 weeks till expiration. And as usual, I will monitor the position, and depending how the market behaves, how far we are at the money, how far we are in the money or out of the money, I may roll next Friday, but quite likely I will keep the position. I will keep the current course until expiration again. Well, that's all for today. Thank you all for watching. Uh, if you like the presentation, please click the like button below, subscribe to my channel. I have actually 2 new presentations about covered calls and how to manage them correctly coming up very soon. So stay tuned for that. And until next time, happy trading.